How's it going, everybody? We're doing this today. All right, so for those of you that are here already, I'll just go over what the plan is, and then I'll go over it again 5 minutes before for those that are joining in just before. Okay, so for today, we have the bank rate for the CAD at 6:45 my time. So that's about 7, 8 minutes out. And then the speech that comes right after at 7 o'clock. All right, so things have panned out pretty close to what I was hoping for. So I was wanting gold to push up, and gold has pushed up. It's even pushed past highs. So that's really good. So I do think that there's going to be a 300 to 700 pip fall on gold during the speech. So a massive USD buy-in. The EU has moved up. The GU has moved up. All good signs for a USD buy-in. Okay, so the pound CAD, it's started its move down. It did push up. It did hit this sub 1.73 high, which is good. I wanted it to be above this level 5, and it's going to be pretty close. It's probably going to be within this range of this low. It might even push and retest that low. I wanted it to stay in here because it still means it's in this zone and it's more likely to push down. So my big fear was that the pound CAD would push down to this zone, and if it did that, then it's more likely to bounce up from that point. So that's why I didn't want it to push down that low. So further indications for the CAD to push down is on the Aussie CAD pushing up. You see this hitting this last high on the H1. I think it's actually an H4 high as well. Yeah, so big zone right here for a push down. The Euro CAD, same thing, and it's already starting its move, but it's still within reach of its zone. So this is the zone I'm talking about right here across the board here. So right around the 1.477 level. So that is the last big swing high or range here. And I think that that's a good place for a big sell-off there as well. So there is likely going to be a pretty big move here on the pound CAD. So once the bank rate comes out, a big push down, probably into this zone right in here, and maybe more. And then once the speech starts, that's when the USD buy-in happens, and gold pushes down, and the pound CAD pushes further down from that point. And that's what I'm predicting. So after all is said and done, I think that we could hit as low as at least level 4 here, but maybe as low as level 5 by the end of the day, and maybe more. Let's see, that's 80 pips. Yeah, I think that we could at least see 100 pips today, maybe more than that. So what I'm going to do here is I'm going to add one more position up here near the top, just a few minutes before the market starts, or the news comes out, and that will be my last order. And I also will delete. Well, I think I'll keep that. I'll delete it for now. The pending order at the top there. So a lot of things are stacking up to confirm this trade for me. Basically everything. So I hope I'm right, because this would be a really big, really good trade. You know, there's sometimes before news comes out, I get hints, and I have a pretty good idea. And this one, I'm getting a lot of hints on it. So if I'm wrong, then you know that sucks. But I don't think I'm going to be wrong on this one. All right, so and then after once the Palace speech starts, I've got a link here, and I'll play that on stream. Um, Let's see if I can figure out what's going on. Um, I mean, I probably don't even really need to watch it. I think it's right when the stream starts, you'll probably see some movement on the downside. I don't know if it will be shaky, if it will be indecision during that speech, or if it will just be a straight down. Um, and it would be crazy if I'm wrong and this pushes higher up. You know, we can see that it's crazy that it pushed past all-time highs, but this typically a lot of times is how the market works, where it pushes just beyond the previous high, like it's done right now, and then you'll see a massive sell-off. So where it is right now, breaking stop losses, hitting, you know, and then pushing down, wiping all those guys out. Okay, so yeah, the pound cat's still staying within this level 5. UJ at its low right here, getting ready for what I think could be a big bounce back into this zone. The Aussie about to hit level 4 up here. And the USD CAD hitting this level of support, already starting a small bounce here, which I think that it will at least retest, but maybe break past that 1.36 level. Okay, so we're about 5 minutes out. All right, so you can see what's happening right now is this is on the M15. This is a bullish engulfing candle that's forming. I think this is going to be a trick for retail traders, where price pushes down into the last level of support here, gives a bullish engulfing rejection candle, faking traders out, and we push down. About 4 minutes out. All right, so I'll enter another trade in about a minute or two before. All right, so there could be a smaller push up first to level 5 or level 4, and then I hope that there's a push down. Or it could just be instant where it pushes down. And if I'm wrong, then we push up to at least this level 1 up at the top. And there could be a chance that price could come back down from there, or we just continue up from that point. The less likely scenario, but you have to always keep possibilities open for that. All right, so just about 2 minutes out. I typically don't like to wait until the last minute because spreads start to kind of increase. And we're pushing up just minutes before. That's a good sign, in my opinion. Let's see, USD CAD, USD Swiss franc, okay. Shouldn't see much on the other pairs, but CAD pairs, you should see this push up. All right, I'm going to be entering this trade here. About 60 seconds out. Okay, good. That's an initial push down. Good, good, good. Okay, so no surprises there. Great. Okay, so that's a good start. All right, and then we're going to see how the gold goes. Gold's still pushing up. Pound and other pairs, USD pairs aren't moving yet. I'm hoping that I can get a decent amount of movement here before that news comes out or the speech starts. Good, Euro CAD's moving. All right, first leg working out well, unless there's some kind of whipsaw, but I would like to see this candle close pretty strong. My guess is that it will close we'll probably see movement into this zone before that speech starts. And this is what I was hoping for, a double push. The USD CAD or the CAD pushing this down, and then the speech giving a buy into the USD, which should push the pound CAD down. Man, my heart was pounding there pretty hard. I was trying to hide it, but wow. Okay, so about 2 minutes until this candle closes. I don't want it to whip back up to here. I don't want this to come back up to this point. So I want it to close below there, which I think is a good sign. But it could struggle to have much momentum if the USD is continuing to try to sell off until that speech happens. Man, gold's really going up. Man. I think that we could see as much as 700 pips today down into this last daily support and resistance level. I mean, I've had struggles with gold lately. If I didn't have losses recently, yeah, I would hit this heavy at the top, leading into this speech. This is, again, one of the biggest, most important speeches of the year. It's getting lots of press. It's going on CNN, NBC, every news outlet about what's going to be said here. And I think it's going to cause some huge moves on gold. And I think that it's what's been causing this entire huge buy-in over the last couple of weeks is this speech today. Is banks and institutions driving this up for a massive sell-off and huge profits. All right, so looking pretty good at about close to about 4% profit right now, I believe. It was a good candle close on the M5. Nice and strong right here. I like that reaction. Looks good on the H4. Just hope it holds. So you can see here, I now have, there's so many levels below this, but the reason why I loaded up the H4 and H1 levels, H1 levels are white, H4 levels are blue. It's because there's no support and resistance up here. Since gold has blown past it, it's making new levels in here, and these are the last known levels. And you can see that's actually working. So pushing down into the level 1 H1 level right here, and then bouncing off and pushing up again, or continuing. All right, so the momentum is slowing as I expected at this level. Something I get a little bit more down. So why, maybe some of you are wondering, why do I think that a USD buy-in will cause the pound CAD to move down? Most of the time, a lot of the time, gold will move, the pound CAD will move with gold. And you can actually see this if you zoom out a little bit. So back on February 16th, or February 14th, that's when this big move on the upside started for gold, right? If you go to the pound CAD and you look at that same period, February 15th, February 14th started right here. This is February 15th, and the pound CAD has been moving on the upside. So that's why I really like this trade setup, is because the bank rate is showing that this is likely to move down based on what I was seeing on the other pairs, like the Euro CAD, the Aussie CAD, and where the pound CAD was technically. And then on top of this speech today, it's a double whammy, and could, like I said, give me a ton of movement on the downside. So nah, not on this one. It's, maybe I'll eat my words here, but yeah, I think that this is going to be how this works out. And like I said, the connection between gold and the pound CAD, it should stack up here. All right, 3.57%. If it whips, and if I'm wrong, I should have some time to get out of this trade, break even, or even some profit. I expect the whip would probably push back into my trades about 50 pips or so, if I'm wrong. And if I'm wrong, then gold makes new massive highs all the way. My guess is maybe 500 pips. So indices, I think indices are gonna fall on this. That's kind of hard to tell what they'll do with the information that's said. Thanks, Crypto Moon. Yeah. It would really suck to be right on one side and then be wrong and get whipped out of this. Really hate that. But you try to stick to your analysis and what you're thinking is right, and hope for the best. That's all you can really do here. All right, so it's finding an M5 rejection candle right at level 1, or attempting one. So USD should move up from around here. Pound should move down from this point. All right, and this is starting in about 1 minute. Hi, Mad Maniac. How's it going? All right, so I'm gonna stop my music. Oh wow. Okay, so we're starting this already. Gold still is not moving yet. I'm gonna go down to lower time frame. All right, so gold is starting its move, and I don't see, and this isn't starting yet. So I wouldn't be surprised if I saw some price freezing during this event today. Oh yeah, I forgot about the JOLTS jobs happening, and that's positive. That's good. Is anybody seeing a live feed of the testimony? Is it just not showing up on this one yet? for a second. Okay, wow, look at gold, guys. Shoot. It's anxious. It doesn't even want to wait for it to start. Man, it's look at the price is lagging. Okay, so now it looks like it's starting.
Committee will come to order. Without objection, the chair is authorized to declare a recess.
Is the volume okay?
The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report. An inventive title we use semi-annually here on the committee. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I will note at the outset that this hearing has a hard stop of 1 p.m., which will be strictly observed. I see Chairman Powell smile. Just 3 hours. I'll now recognize myself for 4 minutes to give an opening statement, and welcome back, Chair Powell. Since you last appeared before the committee in June of 2023, the conversation in Washington surrounding inflation has shifted significantly. To be clear, it's not because the inflationary fire has been extinguished. From the most recent data available, food costs are up 21% since President Biden took office. Energy costs are up nearly 32%. Shelter costs are up more than 19%. And you'll pay 37% more for a dozen eggs in America today. As you stated in January, people are still paying more for the basics of life, and the prices they're paying are still high. Families aren't happy about it, as you know, and as our colleagues know. But according to the Biden administration, many of my Democratic colleagues, they should be thrilled. In an attempt to score political points, many in Washington have decided the best strategy is to tell people what they're feeling isn't actually accurate. They claim Bidenomics has brought down costs, and their partisan so-called American Rescue Plan put our economy back on the right track. Of course, we know the opposite is true, since inflation skyrocketed soon after the American Rescue Plan was enacted, which was predicted by several former Obama administration economic officials. Instead of working to solve the underlying issues causing high prices, the administration...
Sorry about my date being wrong.
Citing corporate greed and so-called
sometimes that happens.
Some Democrats have even trained fire on you, Chair Powell, blaming interest rate hikes, which were necessitated by Democrat spending, for the high cost and brazenly calling you to make cuts prematurely. It's highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation. As I have always said, you're a steady hand, and I believe you are committed to the Federal Reserve's independence, as am I. Just as you have rejected the outside pressures of politically motivated agendas, I hope you will be just as attuned to the threats of politicization when the calling is coming from inside the House. Vice Chairman Michael Barr's so-called holistic review of capital requirements and the fatally flawed Basel III endgame proposal.
Wrong about your trades all the time. Nice,
yeah. Concerning trend of partisan proposals taking priority over supervision. This has real-world impacts, as we saw 1 year ago this month when the supervision and regulation arm of the Fed was late catching up to the effects of the acceleration of interest rates on the banking system. Americans were understandably shaken by last year's banking turbulence. As we continue to monitor potential instability, including bank exposure to commercial real estate, it's critical that the Fed keep its eye on the ball. This does not include enacting new, far-reaching, and ultimately harmful regulatory policy, though. As you know, members on both sides of the aisle, on this committee and in Congress, have made clear that the Basel III endgame proposal would be catastrophic for families, communities, and small businesses. Regulators should withdraw it and start over. I think that's the proper course with something as deeply flawed as the current proposal. Additionally, given that other significant proposals would have to fit holistically together, regulators cannot simply proceed with them as separate modules or using a cut and paste approach. Most importantly, as the Basel III endgame proposal is discarded or altered, I strongly urge you and other regulators not to finalize the long-term debt proposal. Instead, Chairman Powell, I would encourage you to stick to the task at hand and follow the data. The stakes are way too high to put politics over sound policy. With that, I yield back, and I'll now recognize the ranking member of the full committee.
Thank you very much, Mr. Chairman. Good morning, everyone. Welcome back, Chair Powell. While I am pleased by the progress the Fed and the Biden administration have made to tackle inflation, we're not out of the woods yet. In fact, even though my Republican colleagues refuse to acknowledge this fact, housing is still the #1 driver of inflation. Based on the latest data, housing costs continue to make up nearly 70% of overall price increases, outpacing modest wage gains. This means that until we address the underlying housing supply shortage, Americans will continue to pay an increasing share of their income on housing. The affordability crisis will worsen and inflation will remain too high. With that said, it's hard to understand why Republicans feign concern about the economy when they're unwilling to address the key driver of inflation, housing. In fact, Republicans have only put forward legislation that makes things worse for millions of Americans, including moving legislation to slash funding for federal housing programs, including in rural America, where homelessness is rising. This abysmal record on housing is par for
So I'm watching gold to because it will make the first moves.
6 hearings on housing, on top of launching baseless impeachment efforts, censoring members, and pushing our government to the brink of multiple government shutdowns. It's clear that Republicans are too focused on drama.
And it did touch 2150, which is a good number for a potential fall from there.
When I was chair of the committee during the 116th and 117th Congress, not only did we hold 55 hearings on housing, but I and my fellow Democrats enacted 12 critical housing bills into law in the last Congress alone that helped stymie the tsunami of evictions, foreclosures, and homelessness, keeping millions of people stably housed during and after the pandemic. Unlike Republicans, we don't just talk about the issue. Democrats make law. As House Republicans continue to disappoint, committee Democrats are offering evidence-based solutions to keep a fair and affordable housing agenda at the top priority in Congress. That's why I and my Democratic colleagues reintroduce 3 groundbreaking bills to address the housing crisis and bring down inflation once and for all. This includes Housing Crisis Response Act, the Ending Homelessness Act, and the Down Payment Toward Equity Act. Together, these bills would create nearly 1.4 million affordable, accessible, and resilient homes, reduce housing costs and homelessness, and revive the American dream of home ownership for all. So, when my Republican colleagues are ready to get serious about our nation's economy and inflation,
Yeah, I guess we have to wait for Pal's comments,
the bills into law.
which is annoying.
Tomorrow at noon, I, committee Democrats, and more than 30 housing advocates will join together at a press conference to share just how important ending the affordable housing crisis is to the state of our union. And so I invite all of my Republican colleagues who say they care about this issue to come on and join us. I look forward to discussing this critical issue with Chair Powell today. And, Mr. Chairman, I yield back my time.
Chair recognizes Mr. Barr, Chairman of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
Welcome, Chairman Powell. Runaway inflation and increased interest rates still have Americans reeling.
Wow,
And
camera
while
guy. Jeez.
The rate of price increases have come down thanks to monetary tightening, the overall level of prices remain high. The toothpaste is out of the tube, and Americans, the average American family, still is paying about $15,000 more for the same goods and services that they were purchasing just 3 years ago before the Biden administration. So Americans have suffered years of eroding purchasing power in their paychecks. And while I'm pleased the Fed is resolved in getting inflation back under control, I'm not pleased by the numerous recent unjustified, politicized, and underanalyzed regulatory proposals. The Fed needs to withdraw and repropose the irredeemably flawed Basel III Endgame proposal, especially given that 97% of public comments across the ideological spectrum expressed disapproval of the proposal. Chair Powell, I urge you to listen to the American people, withdraw the Basel III Endgame proposal, and
This guy's kind of intense.
The Fed's plans are moving forward. I yield.
The Chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair Powell, for being here today. And I had a chance to actually read the monetary policy report from cover to cover thanks to an exceptionally long airport delay. Going back home last weekend. And the feeling I got again and again is that things are fairly well recovered from COVID and getting back to normal. That we're in the range where ordinary monetary policy and fiscal policy will allow us to satisfy your dual mandate. Today, unemployment remains near historic lows. Core PCE inflation is down to 2.8% year over year compared to a peak of 5.6% in 2022. And the major stock indices are hovering around record highs. GDP growth continues to beat expectations, and the U.S. economy has added more than 14 million jobs since President Biden took office. The GDP itself is pretty much back on the trajectory that it would have been pre-COVID. U.S. manufacturers alone have added nearly 800,000 jobs, employing more workers now than any point since 2008. And so my lesson from that is that the fiscal response that we engaged in was appropriately tailored, and the soft landing is within sight. Thank you, and yield back.
Yeah, it's Gold's gonna wait for Gild's gonna wait for Powell. Nothing really interesting is going to be said in these pre-comments.
As you know, you'll be recognized for 5 minutes for a summary of an oral presentation of your testimony. Without objection, your written testimony will be made a part of the record. Chair Powell, we're now recognized for 5 minutes.
Chairman McHenry,
okay.
Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%.
Okay, so movement will start around when he talks about
accompanied by an increase
cuts
in the supply of
or
workers,
interest rate stuff.
individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year.
Yeah, any interest rate hints is where things will start to move.
2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%.
Nothing shocking being said here yet.
At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Yeah, nothing
Thank you, Chairman
that we
Powell.
didn't know already said there.
And I should have noted this at the outset, but this is your 25th testimony before the U.S. Congress as Chair of the Federal Reserve, and we thank you for your service and your commitment to congressional oversight. Very much appreciated. I'll now recognize myself for 5 minutes for purposes of questions. Let's begin with what's top of mind. We have two issues that are top of mind with the Fed: regulatory policy, with the Barr proposal, the Michael Barr proposal on capital, and interest rates. We're in a political year. And the lens of a political year falls heavily on all government, all parts of government. There's a lot of 3 years of high inflation and impact on American families. And now that inflation is receding, there's been a great deal of speculation about when the Fed would cut rates. Some say that it's going to be a lot of rate cutting this year.
Okay,
Some say none.
this could
What say
be
you?
something.
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to, and do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, and released for comment, the general concern of a lack of economic justification for these actions, but also on the substance. The proposal goes much further than the Basel III committee recommended on capital requirements.
Man, he's not going to give us anything here.
Great
Maybe
disadvantage
something will be
and
said,
action
but
potentially.
again,
my first
nothing that
question
we
is
don't
on
already know
substance. Is the
already.
Fed listening to these comments that have been nearly unanimous in opposition to this rule? Is the Fed listening to these comments on the impact the rule will have on everyday Americans? And what is the status on rulemaking, and what is the plan moving forward?
So you're right. We've received voluminous and very substantive comments, as well as the quantitative impact study that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world. As far as process is concerned, we're really not at the stage of making decisions about that. That's down the road at least a bit. I will say the question we get is reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You won't rule that out. You would not rule that out at this stage of the game, reproposal.
Not at all. No, I think it's a very plausible option. It will depend on how things lie at the time when we reach that point.
Okay. And there's a lot of concern about the interplay between different parts of the rule. And if you change one, what does economic analysis look like for the new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
That is right. I said this would be a thoughtful, deliberative process. It's more important that we get this right than that we do it fast. We understand that. This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much, Mr. Chairman.
Okay.
Chair Powell,
So
I
nothing
want to talk to you about
nothing
housing.
interesting.
But before I get there,
It,
let me address
what
the
traders are
issue
looking
of
for
mergers. Last week,
are
I read
hints.
a letter along with
What traders are looking for are hints into where interest rates will be. Is it going to cut? Is there some kind of outlook? And he hasn't given us anything that we haven't already known already. So that's why you don't see the markets moving yet. And they might decide to move a little bit later on after this is over. I think he might be testifying again tomorrow. Let me see. Yeah, so he's testifying again tomorrow. So something might be said there as well. So if price doesn't move today, then again, we're looking for hints. And if anything happens with those hints, then yes, price will move in a big way.
While unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your updates to the merger review process? And does the Fed plan to convene public hearings on the Capital One and Discover merger?
I believe we're in regular contact with the Justice Department on what's going on with their review of merger practices. We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application, so there's really not much to say yet. It's early days. When we do get that application, though, we're going to evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your bank merger procedures are ready to do the work that's necessary when you evaluate this possible merger?
I do.
And are you supportive of organizing community hearings on this merger?
We haven't even, I haven't talked about that with anybody. I will say this: we've done that in many large mergers, but that's not a conversation we've had yet. We literally don't even have an application for the merger yet.
Thank you. We'll stay in touch with you on that. So turning to the national affordable housing and homelessness crisis, where we've seen steady increases year after year in home prices and rent costs, which are a symptom of the chronic undersupply of affordable housing. Indeed, more renters and homeowners are now spending more of their income than ever on housing costs. And as you know, housing costs continue to be a primary driver of inflation. Do you think the Fed has sufficiently emphasized the role that housing costs play in keeping us from your 2% inflation goal? Do you think it's reasonable to believe that monetary policy can accomplish this goal without a fiscal policy response? And if you do, how long will it take to get there?
Housing services inflation is one of the three components that we look at that make up the core PCE index, and it has been coming down from its heights of a couple of years back. It's part of the story. I think the overall story is that goods price inflation has turned negative. Goods prices are actually coming down a bit. Housing services inflation, you can see from currently entered into leases that as leases turn over, the increases are going to be smaller. So in our forecast and in everyone's forecast, housing services inflation comes down.
It's been reported that the methodology used to assess housing costs as an indicator of inflation is imperfect, namely because it considers costs based on both new and old rents, including for owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address
Timothy,
these imperfections in the housing cost.
Yep, still trading. Most people cycle out after about 5 to 7 years. It's because it gets too hard. It's not very profitable, and I'm still at this. Still pushing away. It's tough, especially if you do this in a transparent, honest way. Yeah. Most people don't. Even the honest people fudge the numbers. It sucks. But yeah, just still pushing through.
Are moving up at a much slower pace is the reason why forecasts are for housing services inflation to come down, and that absolutely plays a role in our thinking.
Thank you, and I yield back.
Chalet yields back. The Vice Chair, Mr. Barr, I'm sorry.
Wrong Vice Chair.
Wrong Vice Chair. The gentleman from Arkansas, the Vice Chair of the full committee, Mr. Hill, is recognized for 5 minutes.
Thank you, Chairman. I want to welcome you. Chairman Powell,
6 years exactly. Wow.
Glad to have you back and your expertise. I want to pick up where Chairman McHenry left off on his conversation about Basel III Endgame. You made a good point saying you're not taking the whole concept of reproposal off the table as you review the analytics, and you will discuss the interactivity of that rule with other rules. So if you were to repropose the Basel III Endgame, would the Federal Reserve delay then the long-term debt proposal that's on the table? In other words, would you agree that the agency should not finalize this long-term debt proposal for bank holding companies until banks have a better understanding of what their capital obligations under Basel III Endgame might be?
So we haven't made the first decision yet, so it's hard, I couldn't say definitively. But yeah, that's a question we'd be asking ourselves: is what would be the implication for other rules, including the long-term debt?
Well, and is the Fed considering changes to the requirement for regional banks to issue long-term debt? Right now, it's stated to be issued at 6% of risk-weighted assets. In abundance of caution, in case there needs to be a resolution. Obviously, we know the logic for it. But is that
Yeah. Wow. You've been in the trenches for 10 years. Yeah. I've been doing this for. I think I'm about in my 20th year now since I started trading. You know, maybe I should be further than I am, but this shit takes a long time to get good at and to be consistent. And doing it in front of people is way harder. If I was doing this by myself, just privately, I think I would be way further ahead than I am doing this in a public way. The pressure is what makes it more difficult. You get pulled in different directions because you're trying to compete with other people. If you're selling a product or if you have a business, it gets harder. Are you going to be switching to TradingView EAs at some point? You think DX trade? Let me just mute this for a second. Nothing really interesting being said yet. I'll keep gold on just to see. So the plan is to at least get my support and resistance indicator put onto TradingView. That's the first thing that we're working on. And then probably the support resistance EA after that. And then we'll follow into EAs, probably starting with something like the Ranger in TradingView, and then the Powerhouse, the bigger one after that. It's going to take a while to get implemented, and I want to see how things work with the support resistance indicator in EA first, and then move into other potential areas. But it's going to be a slow process, but TradingView I think is a lot more advanced than MetaTrader 4 and MetaTrader 5. There may be a lot more possibilities and things that we can do in it. From what I have, my developer has said so far, it sounds like we should be able to do more with it, which is good, meaning stretching the possibilities of what's possible within the algo world. Oh yeah, and DX trade, it's garbage. You can't use algos, you can't use copiers. You can build a bridge, and there are bridges available, which is it's like a piece of software, third-party software that connects in MetaTrader 4, MetaTrader 5 to DX trade, and it basically acts as a human placing algo trades through this third-party software. It's complicated, and sometimes it can be unreliable. But I've used a bridge before in the past, and it does work.
At very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound.
All right, so I want to break price breaking through this 1.72 round number level is pretty important for the pound CAD. That is basically, once it breaks this level, I think it will open up the floodgates and push a lot further down. So somebody was asking how long will it take to recover 25%? Now you can see here that this is what it looks like on the H4. And, you know, let me just expand this out. So this is what it looks like on the H4. It's looking really good, strong candle. I still have about 2 hours and 20 minutes left of this candle, so it still could whipsaw. But you can see where the take profit here is of 22%. I'm targeting this zone down here, right here, for a potential move. You know, I think that the hardest place for resistance or support will be this level 5. It's just about to pass the level 3, which is another area, but the level 5 I think will be the hardest one. And then if that breaks, then I think there's a really good chance that we could extend much further down to at least this level 4, but I may target this one right here, which is about 22% gain. So I'll have to play this out. I do think that this is going to be a big move from this zone, but I don't want to get faked out, meaning this pushes down and then goes back up and retests. That's where the problem could lie, and that's where I have to make a big decision on, do I close these trades out or do I hold on the retest and the further fall on the way down. This has happened before, and I can show you actually when that took place. This one wasn't quite a retest, but the same zone, pushed down, pull back, and made a lower high and continued down from there. But this one was the most concerning in the beginning. This was the first time that this zone was touched. Pushed down and made almost probably about the same amount of move right now, and then came right back up into that same zone and didn't break the high, but then fell a lot more. So I would like to try to hold out for that whip if it takes place. But again, we're coming into the hot zone right in here. We're real close now.
About in the field, and I think that Ranking Member Waters touched on one of those big issues of housing, of which is now, you know, we're still trying to get that under control, and I think the Ranking Member has some ideas on how we can do that, and that may be something that you need to consider so that we can further get down the inflation rate. And the other would be the commodity markets, because the cost of food is too high, and people. So that's something else that we need to get in control. Is that not correct? And let me just ask this: can you say that there is a connection, for example, between conflicts and other areas of the world? Like,
I can say now, I don't think there's going to be much more interesting things said here. I'll keep it still running in the background just in case, though. So gold didn't make the big move yet that I was foreseeing. Could this be it? Could it be a late mover today in the later part of the session? Am I wrong and this pushes up? And I guess we'll just have to wait and see. The EU is continuing to ride up. It's right into the round number right now. So this level of resistance. So that's interesting, and gold's not really taking that. So it's just about to hit that level. The pound isn't really moving, which is good. Pound USD, it's staying right at this 1.273 level. It's helping push this down further. But we are at the round number, so first hurdle needs to be crossed, and then second hurdle at this level 5. Let's see what indices are doing. So indices are pushing up a bit at this point. But no hints into what interest rates are going to be. I guess maybe traders were hoping that something would be said here, and maybe something still will be with these after comments. But again, he testifies tomorrow. Maybe there'll be more information. And you know, who knows? People assess the situation, and price pushes down later on in the New York session.
that we had to go and do what we did because of the unprecedented pandemic. What we did was save the economy then, knowing we got some problems that we had now, and now we are recovering quicker and better than any other country on this planet as a result of your policies and the policies of Joe Biden.
The gentleman from Oklahoma, Mr. Lucas, now recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, thank you for testifying today. When you were before this committee a year ago, I cautioned against raising capital requirements on commodity derivatives that our agricultural and energy producers use back home to keep prices of food and power stable for consumers. At the time, you said that was a very specific concern and you weren't sure the proposal would even address commodity derivatives. And in fairness, that was before the Basel proposal was official.
Okay, so the EU hitting this round number, level 2, which could mean that it might fall from there. GU is holding out at this level 3. Gold not really moving. Aussie USD also at this peak. Market's still holding out here. USD CAD though, freak. Yeah, I was considering entering a trade on this one too, since it was at this peak up at level 2. I had a feeling that there was going to also be a big move on the downside, but that goes for any of the pairs connected to the CAD. So the Euro CAD here falling, the Aussie CAD falling as well. So, you know, I thought that gold would move, didn't, but I knew that the better pair from a technical and fundamental level was going to be the pound CAD. So I'm glad that this is working out so far. Some prop firms moving to C-Trader, yeah. I'm actually kind of surprised that that's the case. They probably have to be pretty reputable prop firms in order to acquire C-Trader, because it's harder, I think I mentioned before, it's harder to do funny business in C-Trader. It's a platform that is, I guess they claimed, built by traders, made for traders, not for brokers, basically. Brokers don't like it. All right, so I'm not sure how long I'll go for here. I guess until the speech is done. And just in case he says something that sparks the, some volatility into the market.
Without objection.
Thank you, Mr. Chairman. Chairman Powell, I'd now like to focus on how the proposal is set to significantly disincentivize banks from offering clearing services. In Dodd-Frank, Congress mandated central clearing as a way to reduce risk in the system. The number of banks that can clear derivatives for end users has reduced over time, making it harder for end users to find a bank to offer.
Yeah, I saw the CBK buying at the top there. And, it's an algorithm. It doesn't know what news is coming. It doesn't know that the CAD rate's coming. It doesn't see that it's at highs and that it's been in this range. That's what we have to deal with the algorithms, is that they're just not going to see the whole picture, and they're going to do their best, and they have historical data to back up their strategy, the methodology. And so, it's going to fall, yeah, and it's going to enter more trades, and it will go in a drawdown, but it will recover, and that's what it goes with. That's how it rolls. Its advantage is in a different way. Like manual traders, you'd be like, oh man, why is it buying at the top? That sucks. But its advantage is in its trading history and its recovery pattern. And so that's, can't really compare algos to humans in that way. All right, so yeah, looking pretty good here. Pretty close to, we're still about 25 pips away, I think, 27 pips away from level 5. I think that price may stop there for today. That may be the extent of this. I want to move a little bit further beyond level 4 and hopefully hit level 5. So I think I'm probably going to end here in about 12 minutes to see if anything else happens. But maybe something will be set tomorrow. But gold was anticipating more of a move. This started right at 7 o'clock, 4 minutes in. There was a pretty big 100 pips pushed down, 120 pips, and then crickets, basically. Man, but this move, that 73 pips on the USD CAD, and since the news started, we're about 60 pips. So the USD CAD has moved more than the pound CAD, which is pretty shocking today. All right, so I'm gonna expand this out. I don't think anything else is going to be said here. Let's see what profit I'm looking at right now. All right, about almost 6% profit right now. And if I've had this reaction now, I think I want to hold this for as long as I can. And again, I'm going to try to back this up with the swing levels that have happened before. This significance of 1.73 is so strong, with this coming down here and the same level here as well, and then again here. I think there was like 50 pips on the first one. Let's see, I might have been more than that. 400 pips on the first one, 900 pips on the second one, 500 pips on the third one, and then this one almost touched that level, and that one had about 300 pips. So I'm hoping that this is at least 300 pips, and I think that an obvious spot is right here for a pullback and then a continuation, or at least a retest of this level here. So we'll come down, bounce here, back up, retest, maybe a small pullback before continuation, or it decides to continue back down from there. Okay. All right, so the pound is starting, the pound and the EU are starting to move up. And it could be because we're seeing how much movement down we're seeing on the USD CAD right now. That's the biggest moving pair at the moment. Gold's still not moving. It's ignoring this move on the EU and GU. All right, so there's a little bit of a pullback going on right here at level 4. It's not big though. All right, so the biggest thing I'm going to be looking for is this H4 closure. So that closes in about 2 hours, is that right? Yep. I want to see a strong close, at least a close below level 4. I don't know if I'll get that today. All right, so this push right now is the USD selling off. I don't know if it's going to be limited though. We are at this round number right here, so it could struggle to break through just above here and pull back. But the next level of resistance is 1.09152. All right, guys. I think I'm going to end for today. I don't know when I'll be back on streaming, but I'm going to watch this trade out, see how it goes, and likely hold it for hopefully a couple days, maybe even into next week, depending on how much reaction and pullback I get at these levels. So hopefully this pullback in at this this level, right in at level 4, isn't too substantial. It could push back into at least this area here. A much larger one would be up into this zone, but I still want to wait this out, and hoping for this zone a bigger push on the downside. All right, guys. Thanks for tuning in to the stream today. And looks like trades worked out. I don't know when I'll close these, but hopefully in profit. And we'll see you on the next one. Thanks for joining.